How will the outcome of this election impact gold? With less than 3 weeks to go, some analysts are calling this the most consequential U.S. presidential election in modern history. According to a leading precious metal strategist, regardless of who wins on November 5th, gold is positioned to benefit. Before we begin, remember to like this video and subscribe for more economic updates. Gold is already up nearly 30% this year to well over $2,600 per ounce. Silver is up even more, having gained nearly 32% in 2024. Ola Hansen, head of commodity strategy at Saxo Bank, believes precious metal strength will likely continue. Hansen highlights that the Federal Reserve's monetary policy decisions will play a significant role in shaping gold's trajectory. He adds, a lower interest rate environment would likely boost gold's appeal, especially if the Fed ends up cutting more than expected in coming months. In September, Federal Reserve policymakers cut interest rates for the first time in more than 4 years, kicking off their return to a declining rate regime, with an unusually large one-time reduction of 50 basis points. Going forward, Fed officials expect to reduce interest rates by another 200 basis points over the next 2 years, and there is effectively no reason to believe that the central bank's recent sharp pivot would somehow change based on who happens to be president. Another pro-gold factor likely to remain intact regardless of who becomes president is rising geopolitical and economic instability. Hansen notes that the broader global environment characterized by geopolitical tensions, de-dollarization efforts by central banks, and economic uncertainty continues to underpin demand for gold, adding that investors seek stability amid volatile economic conditions. He also suggests gold's geopolitical premium could rise further if Trump wins and delivers on his huge tariff threats as more countries transact outside the U.S. dollar system. The most direct way both candidates could boost precious metals is by increasing fiscal uncertainty, a factor many strategists credit for gold's success this year. Responding to a Bloomberg report suggesting that gold's recent outperformance now makes it a better safe haven than U.S. Treasuries, Christina Hooper, chief global market strategist at Invesco, said, "The bigger theme is just the concern about a lot of debt and concern that the fiscal situation in the United States is unsustainable." Hansen agrees, suggesting this concern could grow in the coming years, no matter who is in office, noting that first Trump and then Biden threw caution to the wind in blowing up the federal deficits. Hansen added, it doesn't appear either party is set to deliver on fiscal austerity, which raises inflation risks, a gold positive. Trump wants to cut taxes with no credible plans for reducing spending, while Harris offers some new tax policy ideas and would like to extend Biden's huge fiscal programs. Hansen emphasized, either administration would inevitably expand the deficit in an economic slowdown. Summing up his outlook, Hansen referred to gold as an attractive option for long-term investors seeking to preserve purchasing power, and concluded, overall, the combination of geopolitical risks, fiscal concerns, and potential shifts in monetary policy in the wake of the U.S. presidential election makes a bullish case for gold as a hard asset. No matter who takes the White House, the factors driving gold's rise, economic uncertainty, geopolitical tensions, and fiscal challenges aren't going anywhere. Gold is primed to thrive in the post-election landscape, offering security in the face of volatility. Until next time.